Okay, welcome everyone. Let's get started. Today's topic is the offer, the traps and the pitfalls. So why is it so important to talk about making offers? I'm gonna tell you, the three activities that you need to engage to make money are making offers, number one. Number two, talking to owners and talking to listing brokers. So we're gonna be focusing on the one activity that is gonna make you the most money, which is making offers. Okay, so having said that, I want to show you something that really caught my eye. In this email, I just want you to focus on the last paragraph. He said that we bought the property for $125,000, and the rehab cost and holding will be approximately $155,000. The home was a 4-bedroom, 1.5 bath. However, we transformed to a 4+1 bedroom and 3.5 bathrooms. Okay, the house was just listed a week ago, and we already received offers of $385. Another one came in at $389. So praise God, I would put our profit over 80,000. So let me tell you, this is something that you need to avoid. Okay. So first of all, as you and I are real estate investors, we are not rehabbers. So these are the type of projects that you need to stay away from. So if you invest in a property, 125 just for the purchase price, and the rehab is 155,000, double what you invested in the property, that's a big problem. Not only that, but can you imagine the time that it's going to take you to do the rehab of this kind? I mean, you're going to be touching every single thing in the property, every single system, HVAC, plumbing, electric. You're going to need blueprints, permits, plumbing, electric, potentially roof, because you're adding extension, you're adding bathrooms. Not only that, but we are investors. You're going to be making money when you're in and out very quickly. The minute you start changing the layout of the property, adding bathrooms, adding bedrooms, you are not a construction company. You are investor, okay? Stay away from these god rehabs, extensions, unless you have a big construction company or a lot of background on construction. You've got to stay away from it. And then let me just quickly run you through the numbers, okay? So if you are hoping to sell the property for $389, okay? So let me just give you an example. I'm gonna pull the calculator, $389, okay? So let me just go back to my calculator, because something that is very critical is knowing how much to pay for the property, right? So I have the calculator. So if you believe the ARV is $389, right? That's how much you're gonna be getting. You're gonna multiply these times 70%, okay? Minus the rehab, okay? The rehab was 155. The most you should pay for this property would be 117. First of all, they're overpaying for the property. Now, the holding expenses for this type of property, okay, please let me know if you can still hear me. Let's just look at another example. Okay, so purchase price, rehab, this is a property we did in Bellwood, 50,000. This is just sort of like the borderline for us. Any property that you start putting in 35 to 50,000, it's on the borderline between a medium rehab to a big rehab, okay? Anything over 50,000, I would consider it's quite significant. So you're gonna be touching most of the systems in the property, pulling permits for just about everything, electric, plumbing, and so forth. So in this case, This property is going to, I mean, it's rented for $1,800. The principal, interest, tax, and insurance is $1,250. So obviously we're cash flowing quite a lot on this property, but what I want to focus on is making the offer, right? So the way we're going to be making offers is based on the ARV. We're going to take the ARV. So if the ARV of the property is 210, we're going to multiply that by 70%. And I will explain what that means, minus 50,000, okay? So 97, so we bought it for 95,000, and obviously we expected the rehab to be a lot less. So it went over, but still we are able to do a rental paying the flip price. So the formula, I'm gonna tell you what the formula is. The 70%, so if you take the ARV, why do you multiply that by 70% on the offer? Because 20% should be your profit, okay, when you do a flip. Even if you do a rental, especially in this market, you need to pay the flip price so that you have the option to keep it as a rental or do a flip. So in this case, you multiply it by 0.70 or 70%, 20% is your profit, and the other 10% accounts for carrying costs, holding expenses, closing costs, okay? 10% just for that. So the interest you pay to the bank, insurance, tax, utilities, that carrying cost is the 10% that we account for in the formula. So always multiply the ARV times 70%. So now we're going to be focusing on making offers, okay? And most importantly, understanding what the contract looks like, and then making the offer for the right price, because that's where most investors make a mistake. They don't know how much to pay for the property. So what I'm going to do is I'm going to do a search in one of the areas, for instance, Berkeley, Allsip. I'm picking Bolingbrook. I'm picking top rental markets, okay? And then I'm gonna limit my purchase price to be no more than 180,000. Okay, so find deals. We're gonna find active single family homes, and this is just properties under the MLS. Okay, so what's really going to be very important here is making an offer for the right price, taking into account rehab and current costs. And then we're going to quickly go over the line items in the contract. Okay, so I'm going to quickly pick this property. This is in Allsip for 120,000. So it's been on the market for 48 days. Okay, so this property, it's a 3-bedroom, 1-bath. Let's quickly look at the pictures. So this property, it's a little bit dated, but it needs some work, okay, either for rental or obviously for a flip. So based on the square footage, about 1,000 square feet, and the type of rehab, when you open up a house, you're going to spend at least 15,000. So based on the square footage of this property, the rehab is going to be between 15 to 25,000. Okay. So now we're going to take the ARV of this property, which we believe is around 144. We're going to multiply that times 70% minus the rehab. Okay. And this is what we come up with. Ideally, the most we should pay for a rental should be 96. If we do a flip, 81. So let's take the rental. In this case, this is MLS, right? So MLS properties, everyone sees these properties. So your profit spread is going to be a lot less compared to off-market properties that are technically not for sale. Just for sakes, let's assume we're going to make an offer for 96,000. So pretty much 20,000 below. So what we're going to do is when making an offer via ChicagoDealVault, this is what we need to have set up to begin with. So you go to your user settings, and in here, you're going to have your, if this is an MLS property, your broker. If you don't have a broker, we have a list on the preferred partners that we can refer you to. Our preferred broker is Frank Montrose from Keller Williams. And then loan officer, we have Chicago Funding. Your attorney, our preferred attorney is Gary Davidson from Castle Law. So these are just our preferred partners that you are gonna need to have in your user settings. And on top of that, we have user images. In here, you're gonna need to upload your initials and signatures. Why is this important? Because when we make an offer with a click of a button, we're gonna put your initials, your signatures, your broker, your attorney, your lender, everything. So with a click of a button, boom, you're gonna have everything in one click, okay? So let's take a look at this property. We're gonna make an offer for $96,000. So let me show you how quickly it is to make an offer, because the most we should pay for this offer should be $96,000. So if you're gonna make an offer for $96,000, you need some leeway for bargaining, right? So you're not gonna offer your max allowed offer. So you're gonna start a little bit lower. So I'm gonna start at $90,000. 1, 2, 3, okay? Now, with today's crisis, you need to account for at least, I would say 2 months for you to be able to close, if not more. But obviously, if that takes longer, you need to file an extension through your attorney. So in this case, we will need to do April, May, June, end of May, okay? That's something realistic. Now, this is one checkpoint that we can utilize in the contract as is. So many properties are gonna be sold as is. So you're not gonna get any credits for any type of work, okay? And how do you find that out? So let's go back to the subject property. We're gonna look into the details, okay? In the details, usually, if they're not gonna make any repairs, they're gonna state in here that is as is, okay? So look at this right here, as is, with no repairs. So typically you're gonna find this under the agent remarks, okay? So it says, as is, taxes are prorated at 100%. This is something to keep in mind when you're buying distressed properties or bank-owned properties. What this means is that taxes are paid in arrears, okay? So typically taxes go up every year, about 3 to 5%, property taxes. So when you make an offer, you wanna have always 105 tax proration. But the exception is when you're buying properties as is, bank-owned properties, usually they won't give you any tax proration. So they're gonna just give you 100% proration, meaning nothing, no increase. They're gonna take into account the last year's taxes, okay? So 100% proration. And then in here, you know, some of these properties that are not in livable condition, you know, they don't have the utilities on, okay? So why is this important when you make an offer? Because many lenders, especially conventional lenders, are not going to give you the loan if the property is not in livable condition, if you cannot turn on the utilities. And these banks are not gonna turn on the utilities for you. So for that case, you always have to use Harmony lenders, okay? Because you're gonna be requesting a rehab loan. So when we make an offer, we're gonna specify the loan type is gonna be rehab, okay? That's with the assumption that we're gonna need to do a lot of work on the property. Obviously, utilities may not be on, so that is something very, very important, okay? So in here, inspection, evictions, it's the buyer's obligation, cash sales only, okay? This is something important. When you are using a Harmony lender, okay, you're paying a higher interest rate, they can give you the loan fairly quickly, but right now, due to the crisis, many Harmony lenders are delayed in their lending. Some have put a freeze in their lending. So obviously we're gonna count for 2 months, but Harmony lenders are typically considered as cash offers. But in the contract, even if you're using a hard money lender that is just like cash, you always have to use your mortgage contingency, okay? It's gonna be a rehab loan, and you need to let the seller know that it's a hard money lender, and obviously you always have to have a contingency, okay? So now let's go back and make the offer. So I wanna walk you through the process. So in this case, this is bank-owned property. We're gonna do as is. And in here, you know, cash transaction, we're not gonna do cash transaction. We always, even if you have the cash, you never wanna pay cash for a property. Why? Because you need to leverage from other people's money, other people's time, okay? In this case, you always have to use hard money lenders or private money lenders, right? You need to put as little money as possible out of your pocket. So once we have these, in this case, let's go over the mortgage contingency. This is where I mentioned that the loan type, it has to be rehab, okay? And the tax proration is gonna be at 100%. If it was not a bank-owned property or distressed, usually you are going to have a 5% proration, so 1 on 5. But in this case, it's gonna be 100% proration, rehab loan, and then the loan to value is, it depends on your lender. It could be between 80 to 90%. So what this means, loan to value means that you are putting 10% down and the bank is financing 90%. If it was 80, that means that the bank is putting down 80% of the purchase and you're paying 20% down payment, okay? Most hard money lenders are gonna pay up to 90%. So you wanna use their money as much as possible. And in this case, we're gonna go for a fixed rate, not adjustable. And then that's pretty much it. So all you need to do is submit offer. And what we're gonna do is we're gonna automatically generate the 7.0 contract, okay? It's going to be already pre-filled for you. You don't need to do anything. It's gonna have the property address, the PIN number, and then we're gonna scroll down to where the important data is that you need to understand. So purchase price, 90,000 as we specified. Earnest money, usually 1,000 is okay. That's always negotiable. Since we're buying properties below 150,000, it's about 1% of the purchase price. So in this case, if the purchase price is 90,000, 1,000 is just fine. And then the next is the closing date that we specified, 31st of May. So you need to give yourself about 2 months with the current situation, okay? Now let's go to the financing. This is very critical, friends. In here, we specify that it's going to be a rehab loan, 90% loan to value. So that means that the bank is gonna give us 90% of the purchase price. We're gonna put in 10%. And then the rest you can leave blank, and then we're gonna continue to go down. So here, cash transaction, you see line 84, you never want to do a cash transaction, okay? It's too risky because if you, for whatever reason, want to back out of the deal, if you don't have a mortgage contingency, then it's going to be very difficult for you to get out of the contract, and then your earnest money is in jeopardy, okay? So that is why you never want to pay cash for the property. Let's continue to scroll down. Prorations. So here the proration is the tax. Line 122 is at 100% proration. And as you can see, every page of the contract has your initials and it has a property address. Attorney review inspection. So you have 5 business days to bring an inspector and then have your attorney review the contract. That is very critical for you to do both things, the attorney review and the inspection. Always have an inspector come out to the property because you're gonna point out items that you might not have seen that may be very expensive, okay? And that's just a contingency period that we all have that allows us to back out of the deal. So if for whatever reason, let's say the house has major damages, okay, you can always cancel the contract, okay? So you always have 5 business days once you have a fully executed contract, meaning that the seller signs the contract. So let's continue to scroll down. So you never wanna waive professional inspections, okay? Never ever. So you have 5 days to do the inspection. We're gonna continue to scroll down, and I'm gonna point out what's really important. Every single page will have your initials. And here, business, electronic or digital signatures. This is all pretty much standard. Here, some contingencies if you have another home that you need to sell to be able to close on this one, which, you know, we usually don't have that contingency. Okay, so let's continue down. Wood destroying infestation, possession after closing. That means that, you know, if the seller wants to stay in the property after you close, then they're gonna pay you a per diem amount, okay? But usually that's not the case. As is condition, that is where we checked when we made the offer. Line 484 is going to have your initials. Okay, so what that means is what you see is what you get. Okay, when you look at the property from the inside, is exactly what you're going to get. So the bank, the seller is not going to give you any credits. They're not going to make any repairs. What you see is what you get. Therefore, it's so critical for you to bring an inspector. It's like an insurance policy, right? Because they're going to identify potential issues that you may have. Okay, so as is checked off, and then we are going to continue scrolling down, and that's pretty much it. In here, your signature 5/20, today's date, your broker's information, in this case, we're a brokerage, our attorney's information, Gary Davidson, and then your lender. Okay, we use Chicago Funding. In here, we're gonna have the listing agent contact information, okay, Susan. So once we have the contract, the next step is to present the contract. So if you have a broker, so your broker can negotiate the deal on your behalf, okay? If you don't have a broker, I'm gonna give you a tip of advice. You can directly call the listing agent, Susan, in this case. This is all her contact information, and say, hey, listen, Susan, my name is so-and-so. I'm a real estate investor interested in making an offer in your listing. Would you consider dual agency? What does that mean? What that means is that Susan will represent you as the buyer and obviously her client as the seller. Most likely, obviously, they're gonna say, yes, we can do dual agency, because then they're gonna capture both sides of the commission, not only on the selling side, but also on the buying. So if they charge their client 5-6%, they're gonna capture, Susan is gonna capture the entire 6%. So not only that, but by doing that, she's gonna be very motivated to make the deal happen, okay? So she might be able to disclose some confidential information about her client, which is in your benefit, right? Because she might be able to obviously tell you where they need to be to make it work, like a dollar amount. So that's just a tip of advice. If you don't have a broker, or even if you have a broker, you can still use the listing agent as your broker as well. So that's pretty much it. You get this contract already pre-filled. So all you need to do is forward this email to the listing agent or to your broker, because you're going to get an email with the exact same contract. And not only that, if you have a broker in ChicagoDealVault that you added, your broker is going to get an email with the contract. So on their user setting, right here on their buyer brokers, your broker is going to get an email with the offer, okay? So right here. So this is the email. And this is the offer that we just executed. So show all 5 documents right here. So this is the offer. So this is the PDF that we were looking at. It's already in your inbox, and it's going to be in the inbox of your real estate broker. Okay, so right here. And then in the offer, we also include few documents. So we include the articles of incorporation, okay, because they're going to ask you if you're buying the property under your entity, which you should always do. They're going to ask you for the articles of incorporation, and the line of credit. Okay, so we have a line of credit right here on their Home First Realty, right? So this stipulates the terms, how much we have available. So this pretty much guarantees that we're gonna follow through and purchase the property. So these documents are very important to include in the offer. Okay, so make sure that you get a line of credit from your Harmony lender, because this is critical when making an offer. If you just make an offer without sending the articles of incorporation or the line of credit, then it's sort of weak, okay? Because the listing agent is gonna say, well, I've got your offer, but can you really close? I mean, do you have the financials to close on the deal? So that is why those documents you upload right here. POF means proof of funds, articles, and operating agreement, okay? So these are typically the 3 documents that are gonna be included when making an offer. So once you make an offer, you're gonna have all those documents in your inbox and in your broker's inbox. It's that simple, friends. So all we need to do is either forward that information to the listing agent, and the listing agent's contact information is right here. So this is the subject property. Under the agent's remark, we're gonna give you Susan's email address. So all I would need to do is just forward that information. And in fact, I'm gonna do it right now. So what I will do, just for sakes, okay? So I'm gonna do a forward, and then all those documents right here. And then, so I'm gonna say, hello, Susan, please find attached offer. That's it. So, and in the email, we're gonna put her email right there, okay? And then I'm gonna delete this forward and then send it. Boom, okay? So I just sent the offer to the listing broker, Susan, okay? For 90,000. I know it's way below the asking price, but listen, right now, there are gonna be many motivated sellers, because right now they're losing a lot of money because the properties are not moving. People are not visiting properties. So you never know. If we can get this property on the contract for 90,000, that would still be a good deal, right? But obviously we still need to do an inspection, go check out the property, make sure that it doesn't have any major repairs. And if it does, then we can just back out of the deal. But Allsip is just a great area. Now, I'm gonna show you how to make an offer for off-market properties, okay? Off-market properties are right here. Probates, pre-foreclosures, upcoming auctions, fact-on properties, vacant properties, wholesale deals. This is even easier, okay? So I'm just gonna find a great deal in Allsip, Berkeley, and that's it. Let's just keep it simple. We're gonna find with lots of equity, pre-foreclosures, okay, in those top rental markets. So I found 14 awesome deals. I'm gonna pick the one in Berkeley because Berkeley is #1 rental market, okay? So this is a 3-bedroom, 1.5 bath, 1,200 square feet. So here the owner owes 80,000, okay? The property is worth way over 200,000. So there's a lot of equity. Assuming the property needs light to medium rehab, then we are going to be spending between 20 to 30,000 based on the square footage and the location and the size of the property. Okay, but we always obviously have to see the property from the inside. So based on the ARV and the rehab, this is the most we should pay. For a flip, 133, for a rental, 156, for wholesale is obviously the least. So even if you are gonna do a rental, the strategy that we currently apply is we like to pay the flip price. So the most we should pay for this property should be 133,000. So in order for us to make offers on off-market properties, what we have to do is reach out to the owner, okay? In this case, the owner is right here, Ruby Matthews. So when we reach out to the owner, either we call them or we do door knocking. The objective is to make an appointment, okay? Try to listen, exercise empathy. They might be going through a lot of emotional and financial distress. Try to find out exactly what they need. Either they want to stay in the property or they want to sell the property, because we're problem solvers. If they want to sell the property, well, great news, because we know how much we should pay for the property. In this case, you have a lot of room to bargain. Okay, so in this case, you need to pay at least 80,000 to the bank, plus fees, late penalties, and so forth. This is gonna go up to probably 90,000. And then on top of that, the owner, Ruby, needs some money to settle somewhere else. So even if you pay 20, 25,000, you're still way below the most you should pay. So then let's assume that we were able to reach out to the owner, make an appointment, go see the property, and then it comes down to making an offer. So you click on make offer off market. This is a simpler contract, okay? This is a 2-page non-invasive contract. In here, we know what the top dollar amount should be. So this is gonna be already pre-filled with your company name, and then this is gonna be the owner's name. In this case, Ruby, I believe is Williams, okay? And then the property address and so forth. So the purchase price, the most we should pay is about 130. Let's start with 120, okay? 120,000. Deposit, again, earnest money, you can put in as little as 500, 5,000. And again, this goes into escrow. So your money is safe. It doesn't go directly to the seller. We're gonna put it into an escrow company, into escrow with the title company. So let's assume we do 500. Okay, balance at closing would be 119,500. Okay, and then the total purchase price is gonna be 120, 1, 2, 3. Okay, now the first 3 lines or paragraphs is just to make the owner feel special, okay? We're gonna cross them off. We're not gonna use them. So I'm gonna tell you what those are. So it says that this offer is subject to buyer obtaining a real estate mortgage for no less than, and then the given amount over the next so-and-so dates. So in this case, we are going to make them a cash offer, obviously using a Harmony lender, okay? So you can cross that off. The second one is, the offer is further subject to buyers obtaining a home inspection report and termite pest control within so-and-so days. So what we have in this case, we can also make the owner feel special because we have already seen the property from the inside. When we build rapport with the owner, at that point, we can also, and have the owner sign, we can have an inspector check out the property, okay? So we do need permission for us to bring somebody, review the property from the inside like a professional inspector. But we can cross this off as well, just to make the owner feel special. And then the third contingency or clause says that the owner, meaning the seller, shall pay broker a commission. So in this case, it's between you, the investor, and the seller. So we're gonna cross this off. There's no broker involved, so there's no commission. And that's the beauty, right? When working with off-market properties, you are directly working with the seller. So the seller doesn't need to pay a broker's commission. They don't need to make any repairs, okay? That is why when we make an offer, we need to take into account all the rehab that needs to be done on the property. And then the next paragraph says, said property is to be sold free and clear of all encumbrances. So what we need to do in this case, we are going to, through your attorney, have title insurance. Okay, what that means is that we're going to ensure that there are no encumbrances or liens on the property. Okay, that we're going to receive what's called the special warranty deed. And then all closing shall occur before, remember, 60 days from today, so May 31st. So that'll be 2020. Okay, so you give yourself about 2 months. You always can extend these. And then here we stipulate where we're gonna be wiring the escrow money and what title company we're gonna be using. Now, in this case, the next one, in the event that the buyer does not perform said agreement, the seller shall return earnest money. Okay, so if for whatever reason we default, they can keep the earnest money, so the 500. But obviously we have this contract that is non-invasive, non-intrusive, that will protect us and the seller, okay? Now, here another term is subject to buyer's inspection and approval of the property prior to transfer of title. So in this case, this is sort of like the inspection period that I showed you in the previous $7 contract. So we do have to bring a professional inspector should we decide to do that, which is always a great idea. And then tax are prorated at 105%. Okay, so we're gonna take a 5% increase on the last tax bill paid. Okay, always try to aim for a 5% increase, and that's pretty much it. So this is where we need to have the seller sign and the date. Are there any questions on the line before we continue? I want to make sure that you understand how to fill out these contracts and what these contingencies mean, okay? Okay, so there's a question right here. It says, what exactly is the earnest money when closing on the deal? Earnest money means it's like a good faith deposit, okay? So you're saying, you know, take off your property off the market, here's $500. If I default, if I don't follow through, you get to keep that money. That's what we're saying. It's a good faith deposit, okay? For them to not show the property, for them to sign the contract, that's what that is. But that money goes to the title company and it goes into an escrow account, okay? So for that money to get released, both parties, the seller and the buyer, need to agree. So even if you default as the buyer, guess what? You need to agree on the release of the money. If you don't agree, then it goes to mediation. And if you don't agree in 6 months, the money goes to the state. So pretty much your money is safe. Now, another question, you would lose the earnest money if you fail to close not due to any contingencies. That's what I was saying. For you to lose the money, you would need to agree, okay? When you release the money from the escrow, you as the buyer need to agree, okay? So when somebody defaults, then what typically happens is then you say, okay, my fault, my bad. I wanna keep, you know, the relationship healthy. I don't wanna burn any bridges. Keep half of the deposit. That should cover for your sort of inconvenience, right? Because they didn't lose anything, there were no damages incurred. So that's all negotiable, right? So you always need to keep great relationships with sellers, you know, because they're going through financial distress, emotional distress. So you never want to take advantage of them or do something that will jeopardize their property. So it's all negotiable. Okay, so another question is, and It's on Zillow for 79,000. Okay, I'm not sure what property we're talking about. If the same property is on Zillow for 79,000. Are there any other questions on the line? I just want to make sure that you understand what the offers mean. So let's just quickly recap, okay? When being in real estate, you only have 3 exit strategies. You either flip, rent, or wholesale, okay? Right now, flips are very hard, so my suggestion is to do rentals. When making an offer for the rental, my suggestion is that you use the flip price. That's very critical. So you have both exits available to you. Even if you're pursuing the rental, still try to offer the flip price for it. And then if it's an MLS property, then all you need to do is click on the make offer, and then just put in the dollar amount, when you're gonna close, and then earnest money. Very simple. Remember to fill in your user settings, user images, so that all the contracts are already pre-populated with your information. And the same applies for the off-market property. Okay, that is even simpler. It's a 2-page contract that once you get the seller to sign on either one of these 2 contracts, you have the option to reassign the rights of this contract, meaning you can wholesale the property, okay? So you don't need to follow through, you don't need to buy the property. If you decide to not purchase the property, you can wholesale the property to a cash buyer, okay? So once you get the owner to sign the contract, then all you're doing with wholesaling is reassigning the rights of this contract to a cash buyer. And we're gonna give you the cash buyers, okay? So right here, cash buyers, so you can find, these are people who are used to paying cash for retail properties like MLS. So all you need to do is find them by location, meaning like, for instance, we were looking for properties in Berkeley and Allsip. So here I can find, I don't think I type in Allsip, okay? So let's find out how many cash buyers we have. We have 177 cash buyers. So this is your target audience, who you can wholesale the properties to, okay? So this is super powerful. You can reach out to them, do a mailer campaign, or we even skip trace them. So you can click on the name, and then it's as simple as giving them a call and say, hey, you know, listen, I understand that you purchased a property on so-and-so address. I was wondering if you're interested in another great deal in Allsip or Berkeley. Okay, so it's very, very simple. Are there any other questions on the line? So here, there's another one. So the property I have, he's wanting to sell to me. I can give you the address. I'm not sure if it's in an MLS property. He's a landlord. So Anthony, you can send me the address, and then we'll just plug it in the power search, okay? And then we can just quickly check it out. So you can send the address via the chat. So are there any questions, friends? I just want to emphasize the importance of making offers. So anything else that you do in real estate is overhead. I want to make sure that you focus on talking to owners, talking to listing brokers, and making offers. That's where you're going to be making money, okay? Anything else that you do is not going to make you any money. That is why we want to take on that job, okay? All the overhead that needs to be done, we want to do it for you. So we can assign a dedicated VA to find deals for you. Just send us an email with all the areas you're interested in, and we're going to be finding off-market deals for you. Or if you choose to, you can set up your deal alerts right here, deal alerts. Just put in as many areas as you're interested in, the purchase price, and we're going to be sending you deals for MLS properties, okay? Just MLS. You're going to get them via email, or they're going to be right here in my deal alerts, okay? So that is super powerful, because then even if you don't check, we're going to be analyzing deals on your behalf to make sure that you don't miss any deals. Okay, friends, so that concludes today's webinar. What I want to make a special offer to all of you. If you don't have Chicago Deal Vault, I want to make sure that I give it to you for free. Okay, so I'm going to send you the link to get it for free. So this is the registration form. Okay, so I'll send a link. All you need to do is select in the package, should be special. In the package should be special ChicagoDealVault. Okay, and the promo code is offer. Okay, you're gonna get DealVault for free for the next 30 days. After that, it's going to be $140 per month, or if you decide to do the yearly membership, is going to be $120 per month billed yearly. Okay, but we're going to give you 30 days for free, unlimited training. Okay, and we will also assign a dedicated virtual assistant to find deals for you. Just email us to support@chicagodealvault.com, all areas of interest. Okay, and you can do that right here, areas of interest. So right here, you can select as many areas as you're interested in when you sign up, and we're gonna have assign a dedicated virtual assistant to find deals for you. We have 3 people full-time. That's all they do all day long, find deals and send them to your inbox. Okay, so yeah, for sure you can, Jonathan, you can schedule a chat tomorrow, of course. To schedule a training, all you need to do is click on the green button once you have access. In the upper right-hand corner, it says schedule training, boom, right here. Okay, so this is where you can pick a day and time, and then we'll train you. Unlimited trainings, any topic that you want, we're gonna give it to you. Are there any other questions on the line? I just wanna make sure that you understand the importance of making offers, whether it's MLS or off market. Please, that's one of the activities out of the 3 that is gonna make you money in real estate. Anything else that you do will not make you money. That is why I wanted to spend the time to show you how easy it is to make offers to MLS properties or off market. For MLS properties, obviously make sure that you connect with the listing broker. Try to find out as much confidential information as possible so that you can make an educated offer. But all the numbers to make an offer are already here in Chicago Deal Vault. Make sure that you aim to pay the flip price, even if it's a rental, okay? That's just my personal tip of advice, to be very conservative and include when you set up your information right here, your proof of funds, articles of incorporation, and operating agreement. Okay, that is so critical for you to set up so that your offer comes along with supporting documents. Okay, so that it makes it very strong for the seller. Are there any other questions on the line? You can feel free to unmute. Any other questions that I can answer?